Hi everyone and welcome back to my channel. My name is John and today we're going to talk about a topic very close to my heart, which is insurance planning. And in this specific video, we're going to talk about how much insurance coverage is sufficient for you. So stay till the end to learn how to calculate that for yourself. This will be an ongoing series in my sharing about the topic of insurance, and it's a very wide topic. So consider this as probably part one of the many series. I don't even want to put a number to it because as I build more and more content and I get feedback from the audience, I may cover specific topics, and I don't know how long this series is going to run. So look forward to hearing your questions or your feedback in the comment section. Let me know what are the clarifications you need, especially about insurance plans that were bought by your parents even that you don't even understand and you're now taking over. So yeah, use that comment section. I'm going to start off with this concept called the financial hierarchy. Don't worry if you've never heard about it. I like to use the analogy of the Petronas Twin Towers. Now, a lot of people will admire the majestic height of it, the architecture, the lights. But before you can build a tower that tall, especially two towers that tall, what needs to go into place first? It's actually the piling. Unless and until you're a civil engineer or you are into construction, it wouldn't have crossed your mind because it's often not seen, and because of that, it's often not thought about. And therefore, that analogy brings me to the financial hierarchy, because most of the time when we have a little bit of excess, when we get our first paycheck, you want to splurge, you have a little bit of excess, you put that into savings. And if you have a little bit more than 6 months of your savings, then what you start thinking about or doing is actually putting all those money into investments. Now, the struggle for most people to grasp is that the moment you build your savings and investment, it is not built on a proper foundation. Now, why do I say it's not built on a proper foundation? Very simply, let's use an example. If you saved up about 100,000 in either savings or investment, and one day a medical crisis hits you, you need to withdraw out or sell down some of your investments to actually pay for those medical bills, especially if you are going to check yourself into a private facility. Even today, if you check into government facilities, there are certain expenses, medical procedures that the government won't cover, and they expect you to come in out of pocket, So therefore, that's why I stress on this concept of financial hierarchy, because we often see what is above the surface and not focus on the foundation. And the foundation of the financial hierarchy is actually insurance. Now, within the foundation of insurance, there's actually three main pillars that you should focus on. And today, specifically in this video, I'm going to cover one pillar, which is the income protection, or what I would deem as the human economic value. And I'm going to teach you at the end of the video how you're going to calculate whether sufficient coverage is enough for you. So we start out with the first pillar, income protection, and the concept of human economic value. Now, as a professional, most of the time you spend years going through university, going through professional training to become a doctor, engineer, and it definitely took either your parents' money or scholarship money and time and effort to actually build that professional credibility. Even as a businessman or a businesswoman, from the starting up of a business until you became successful, I'm pretty sure it took years of blood, sweat, and tears for you to be able to reach that level. Now, as a practicing professional, a business person, what is your biggest asset? I want you to pause for a while and think about it. And for those of you who answered your house, your business, actually, not so much your house, but it's close. Your business is even closer. Your biggest asset is actually you. You are the golden goose that lays the golden eggs. You are the greatest asset, or your ability to earn income is the greatest asset that you have. Now, I'm going to pause for a while and ask you this question. What would stop your ability to earn or make an income? That's beyond your control. Thought about it yet? There's actually only two. The first one is actually an accident, and the second one is actually a critical illness or a health issue. Now you think about it, yes, there are other but it would be generally other ways, but it would generally be categorized into these two main categories, right? So my next question to you will be this. For the probability of a healthy person to pass away straight away versus the probability of a healthy person to fall sick first before passing away, which one has a higher probability? If you guess falling sick first before passing away has a higher probability, you guess right. And here are the numbers. If you were healthy and to pass away immediately, that would be a number that's 30% and decreasing. If you were to be healthy, fall ill first before passing away, that probability is 70% and increasing. Now, these are not numbers I pluck out of the sky, and I'm going to show you how I derive these numbers. So in 2011, Great Eastern Insurance actually paid out 534 million in terms of claims payout. And out of that 534 million, health and medical claims accounted for 42% of the payout, and living assurance critical illness claims amounted to 20.9%. So if you sum them up together, it's about 62.9%. And this is in 2011, okay? In 2022, up until June this year, the health and medical claims constituted to 54.1%, and the living assurance and critical illness amounted to about 17.6%. So in total, it's about 71.7% today. So you can see the difference, right? In 2011, it was 62 or 63%. In 2022, it has gone up to about 72%. Now, if you can see that green box in between health, medical versus living assurance and critical illness, you will see that death claims, 27%. In the past, it used to be about 33%. So this is how I derived that 30% and reducing for death claims and 70% and increasing for critical illness and medical claims. Scary, right? So my next question to you is rather simple. When you fall sick or ill, very ill, do you think that the company that employs you will likely give you a 1-year continuous paid medical leave? Even if they do give it to you, you work for a big multinational and they out of compassionate reasons, they do give it to you. How long do you think they can allow you to go on medical leave, paid medical leave? Okay, beyond a year. Secondly, if you have debts to a bank, a car loan, a housing loan, do you think the bank will very likely give you a call and say, hey, Mr. So-and-so, Miss So-and-so, I heard that you're ill. I'm going to forgive you all your debts. Do you think that's possible or likely? If your answer is no to the previous question I asked you, I'm going to share with you another fact. If you're going to fall sick, critically sick, how long do you think that sickness will either lead you back to recovery or healthy status, or does it lead you into passing away or to your death? That likely number is anywhere between 2 to 5 years. Now, don't believe me? Ask any one of your family members or friends, for those who, especially those having contracted cancer or had a stroke or heart attack. This is the average period where they are likely to regain back their health or to fall to their death. And why is this number important is because we need to determine the living expenses that we need while we have a loss of income and that we still need to continue on life. Life just carries on. I know I'm going to sound very morbid when I say this. I rather, when something befalls me, I rather pass away straight away rather than being in a half-dead scenario. Because in a half-dead scenario, you've lost your income, lost your ability to generate active, and hopefully if you've reached a point where you have passive income, then good for you. But for those, a majority of us who only have active income, this is where you really need to be protected because your income needs to be supplemented by some means because you still need to live. You're halfway between passing away and being alive, you see. So let's now calculate what is your income replacement, or another term for it would be your human economic value. So this is where I would ask you, and obviously I'm on a video, but probably put down the expenses that you incur every month. Now, why is this number important? Just take a piece of paper, or if you have a mental note of it, just put it in your mental note now. How much do you spend in expenses every month? So once you have that number, what you do is you take that number, multiply by 12 months, and multiply that by 5 years. And that number is the amount that you need to sustain yourself in terms of expenses over the next 5 years actually. And when you have that number, then you know what is your income replacement sum that you need to assure yourself, because that's just to protect your income. The moment you lose your ability to generate income, you need another source, and insurance is one of the best ways because of the ratios that they're going to give you. Now, I'm not going to talk about the ratios in this video because it's going to be too lengthy, but I'm going to share it in the next video. So go ahead. Right now, if you don't have it or you've not budgeted, you don't know what your expenses, I highly recommend you to take out a piece of paper or put it into Excel spreadsheet, put down expenses you have, multiply that by 12 months and 5 years to be very conservative, and there you have a sum that is sufficient to replace your income. Now, once you've done that, what you need to do now is, if you have an existing policy, you need to go and look at your critical illness sum assured, because that is the payout that you're going to receive if you fall ill of a critical illness. And that is your income protection needs at this current moment. Obviously, when you earn a larger income, you earn a larger salary, your expenses will likely go up. You get married, you have kids, your expenses go up. And therefore, this sum assured need to be increased or reduced depending on your expenses. And therefore, it's pertinent that you know, when you bought a policy 10 years ago, and obviously in 10 years your life circumstances has changed, please do review it to suit your current need. All right, so my last question to you is, does your existing plans have enough after you calculated your what you need? And if you don't, I highly recommend you to either speak to your existing insurance planner or look out for those that can help you plan it properly. I'm starting a series of video educating more people about basic insurance planning and how proper insurance planning should be done. And I've always gotten a lot of these questions, so hopefully they're common. I'm going to start off the series with what I've received and what I've experienced serving my clients all this while. But if you do have specific questions, I'm going to leave a link to a Google form where you guys can actually submit your insurance plans, and I'll filter and I see whether it's a recurring or frequently asked question, and I'll probably cover in the next video. So please do check out the comment section, and you know, if you can upload your policy, you want to redact your name whatsoever, it's fine. Yeah, but give me the gist of the insurance plan so that I can actually, and ask your specific questions so that I can address them. So to conclude, in this particular video, I've taught you about the financial hierarchy. I've taught you the importance of income protection. I've also taught you how to calculate your human economic value, or the sum that you need to assure yourself in case you fall sick due to a critical illness. So take those steps. If you think you've benefited from the content of this video, please do hit that subscribe button. Give me a like, comment in the comment section below, and do share this with people that you think you benefit. And you know, hit that notification bell so that when the next videos are out, especially in this insurance series, you'll be notified.